Hello guys, Matyas here. Quick review of Thursday. Starting off with a high time frame chart and daily bias. Yesterday we made a change in the state of delivery of this order block and we had a nice large range. Characteristic which I want to point out to is when we are really bullish and at all time highs, Thursday can create false high which will be run through in Friday. That's something for weekly range characteristics. What was our bias? On longer basis, we are bullish, but when it comes to this candle, we were expecting lower prices since we have cleared the external range liquidity, so we expect move to internal, which is this order block. Another thing which supports this idea is that we have provided buy side and sell side in the new week opening gap, which is a liquidity void by definition, and then we left the range. This means now it's balanced price range and price shouldn't go through it. How far can we go inside that order block? If you look at set, which we use for refining PD arrays, we have this inefficiency, where we provided only sell side delivery, then we gapped up, and the algorithm is designed to provide efficient delivery, which means both sides, sell side and buy side. Moving on to ES, as you can see it's much weaker and the highs and lows aren't matching with NQ. This signalizes manipulation. Moving on to the Nasdaq 50-minute chart. So when it comes to daily bias, we are expecting lower prices. From midnight, we are under high resistance liquidity 1 hour market maker buy model delivery. Why is it high resistance? Look at the deep retracements and we don't leave any imbalance open, we reprice it. Given that we are on the buy program, where are we drawing to? Well, where is the dealing range high? That's previous day high. After 9:30, we first run the buy side and tap the new day opening gap. Why? Because the street money is bullish. If we are running in the direction of our draw on liquidity, but we haven't punished the opposing direction, what will happen? We will create a double purge. We dropped all the way down to ICT gray pool array. Now the real move begins. As you can see, we post a signature. The bodies can't even go inside the gray pool. They are staying on the top. Wicks are doing the damage. At lunch, we hit our draw on liquidity. What was our bias again? Well, it was bearish. The daily candle has to move down. It has to be there by close. We hit our draw on liquidity. What does it mean now? We will shift lower time frame order flow and start drawing lower. We post a BPR, which is the strongest reversal pattern from ICT's arsenal we know. We close at a consequent encroachment of it. Bodies are not allowed to go to upper portion, which adds to the weakness of price. Where is our dealing range low? Yes, it's right there. You could have used that, but I would have looked for the sell side because it's relative equal lows and it's form of second stage reaccumulation of old market maker buy model. But then we have to aim for something bigger outside the scope of intraday 50-minute time frame. So returning back to daily, there is the order block and what's inside it? Yes, the inefficiency. Why have we reached the consequent encroachment of it? Well, it overlaps with another consequent encroachment and that's consequent encroachment of this balanced price range. After finishing this market maker sell model and hitting the consequent encroachment, which was the daily objective, price pulls back and consolidates the rest of the regular trading hours. Now let's take a look at 9:30 open. We expected a double purge, which means at first we wanted the pre-market session high to be taken and then price to be dropped down into this ICT gray pool. Give us special attention to what arrays am I picking when it comes to right side of this market maker sell model. All these arrays are high probability because we have used them for accumulating on the left side. Here is 9:30, we drop into ICT's gray pool, we do change in a state of delivery, we rally, come back down, returning to original consolidation, see the bodies at the top of the balanced price range, we create an order block, displacement, immediate rebalance plus we hit the order block, another displacement, we create a suspension block and we reaccumulate on it, that's second stage reaccumulation. We rally into our drawn liquidity, which was pre-market session high. We do change the state of delivery, which means now we are switching into delivering sell side. We hit our second stage array, which will send us into low risk sell. We wick into I3G, which is low risk sell. Notice that bodies are staying outside range of this order block. We do signature on new day opening gap low. Off the races, we start spooling. We hit order block, retrace into I3G. One more time returns. Off the races again, clearing original consolidation low. Moving the chart a little bit, we create another original consolidation. We rally away from it. We shifted from consolidating into being directional. We are now drawing to previous day high, which means the order flow is bullish. We do smart money reversal, fake low risk sell, we create a BPR, I3G, fair value gap, which is your AM session silver bullet, order block, previous day high mat. Moving a little further, I want you to return in the video to the part where we are operating on a 50-minute chart, and after that, look how this fractal developed. You will realize that most important element of order flow is that you have to understand where are we in the price delivery continuum and what market maker model fractals is price delivering on the way. Guys, trust me, a whole new world is gonna open to you. You'll be able to pick the right drawn liquidity and POIs. You will be able to predict when time distortion is gonna take place. You will know when the market maker models won't reach its original consolidation. I have a whole section dedicated to this element in my journal. It's so fucking important. Zooming out a little bit, as you can see, we have in fact delivered our objectives and it was so violent. I mean, look at this. I mean, that's perfect. Alright guys, that's gonna be it for this one. I would like you to hit that like button and subscribe. It doesn't cost you anything and you won't miss any reviews either that way. And